Tuesday, December 19th, 2023, Monaco 64, home of alternative economics and contrarian views. We're going to look at China today and the control of the gold market. There's an old saying, he who has the gold makes the rules. And I spoke about the bullion market back on November 9th, about London's century-old dominance over gold trading. And that could be under threat right now. And that's what we're going to look at today. How it's going to impact gold prices is still up for debate. But I would venture to say that there could be price discovery. And I'll explain that in a minute. Before I do, just wanted to let you know that there's been some significant news, I think, in the monetary sphere, in the central banking sphere, and it's about the Bank of Japan. And I've spoken about the Bank of Japan and the yen carry trade many times on this channel. I have a playlist if you want to look into that, about the yen carry trade and how it's important for global liquidity of all financial markets, not just in Japan, but in Europe and in the US. But it looks like the Bank of Japan has succumbed again to their inflationary policy. A couple of weeks ago, it was expected that they would raise rates, their base rate, from negative to maybe zero or even positive. But they failed to do so today. That it was their meeting. And the FT reports that the yen falls after BOJ sticks with negative interest rates. So what do I think is happening there? Well, they're dragging their feet, and they've kind of gone along with the Fed and the other central banks who have stopped raising rates. Fed announced, of course, that it would cut rates 3 times at least in the next 12 months. So I think that's what they're doing. The FT reports that Japan has had decades of deflation, but deflation for them, of course, is not the classical deflation that I've spoken about, which is the shrinking of currency and credit. No, for them is negative CPI. But even if you look at the Japanese CPI, it hasn't really been always negative for the last couple of decades, or the last decade for that matter, as you can see here. So what do I think is happening there? Well, the central banks coordinate everything, and the Bank of Japan is key to keeping this fiat Ponzi going. So I thought that was interesting. Some commentators are saying that this is just temporary and that they will eventually tighten. I'm not too sure. The yen, of course, has fallen today. We're going to look at that later on. So back to China. I want to start with an article from bullionstar.com, and I recommend bullionstar.com. Ronan Manley writes some really good articles. And back in October, he wrote, October 24th, why have all Chinese banks disappeared from the LBMA gold price auction? It used to be called the fixing, and he goes through all the details there of why they changed it and how the Chinese banks got involved. But now they're all leaving, and everyone was kind of puzzled back then why. And I think there are 4 major Chinese banks who participated in the London bullion market price auctions. And I think now we probably know why. And why is that? Well, because Gold Telegraph on Twitter, or X, they reported here, breaking news, the London Metal Exchange is planning to launch new metals contracts using prices from the Shanghai Futures Exchange. Here we go. First, I wanted to talk a little bit about the London Metal Exchange. That's the LME. That has nothing to do with the LBMA. It's been historically a market where you trade base metals or industrial metals. It has been bought out by the Hong Kong Futures Exchange, I'm not sure when, but it's been under the Hong Kong Futures Exchange control for a while. And they've had a gold and silver contract, but it was never successful. It was very small. But I think this is significant because the Chinese, of course, control Hong Kong. And now they're starting a new gold and assume silver contract on the LME. And what do I think this will mean? Well, I think it will mean that people in the West will be able to access the Shanghai Futures Exchange, or people who trade the LME. If they want to take delivery in Hong Kong or in Shanghai, they'll be able to do that through the LME. This is what Gold Telegraph says as well. China's signal to global market participants that they should follow the pricing of their metals as determined by Chinese exchanges rather than relying on Western pricing standards. This is massive news. The dots are starting to connect. Gold. And that's why I think the news from October about the LBMA and the Chinese banks is significant. They were probably told by Chinese authorities to leave the LBMA because they're going to start trading basically the Shanghai gold futures and silver futures on the LME. And some people will say, well, China only has over 2,000 tons of gold officially. The PBOC, People's Bank of China, the US has over 8,000. You said he who has the gold makes the rules. But there are many people who follow the gold market, analysts, experts, and I've spoken recently to Simon Hunt out of Dubai, who's an analyst and does a lot of research about what's going on in China and other places around the world. And there are others as well, like Alistair McLeod. They all talk about how China has at least 20,000, if not 50,000 tons of gold. It might not be all at the PBOC, but it's at other state-owned banks, other corporations, and the Chinese people as well. Interestingly enough, the Chinese government has been encouraging the Chinese people to buy physical gold. They can even do it through their banks. So, yeah, I think this is huge. Am I saying that I think gold is going to go through the roof in terms of price, or the dollar is going to melt down? Not really, but if you've listened to me, to my videos about precious metals manipulation, how it's been ongoing really since the mid-70s when the U.S. put legalized gold again through the futures exchange like COMEX and through the LBMA. Yeah, you might wonder if that price discovery will actually take place. There's a lot of people who think gold should be a lot higher, and I do too. One reason why I do is that gold was at 1900 in 2011. And the national debt in the U.S. was, I don't know, at the time 8 or 10 trillion. I'm not exactly sure, but that's not the point. The point is that now we're at 34 trillion. The United States is running, federal government is running 2 trillion deficits during not a recession. And the world's waking up to that. And that's why China and the rest of the BRICS nations and even nations like Poland have been amassing a lot of gold in the last 2 years. And they're doing it at record pace. Singapore as well. So, yeah, I think this is very interesting. And I made a video, as I said, back in, I think it was November 9th. About the topic of bullion trading, and I explained how it evolved and how London has been at the heart of bullion trading for centuries. And I recommend you watch that video. I'm going to put it up in the cards, and I'm going to put also the Ronan Manley article about the Chinese banks disappearing from the LBMA. Link to it below in the description. You can read the whole thing. So, yeah, that's where we are. And as Greenspan said, Alan Greenspan, and some of you and me personally, I don't really like what he did in terms of changing his philosophy. Maybe he hasn't changed his philosophy, but he went to work for the enemy, so to speak, became chairman of the Federal Reserve, despite being like a gold bug and someone who preaches a small government and sound money. He said that in times of war, in extremis, he calls it, the term, fiat currency is not accepted anywhere. And we're seeing, of course, signs of small wars popping up all over the place. Syria, Libya, we're seeing now Ukraine, we're seeing Israel, Hamas, we're seeing problems developing around the Red Sea. We're seeing, the oil trade being disrupted. So things are only going to get worse, I think, geopolitically, and it could get worse domestically for countries like the US with all the divisions. It could get worse vis-a-vis Taiwan. So, very important development. Of course, things are not going to change overnight, but it could have a big impact, on the bullion gold market going forward, especially in the next year. But we'll have to see what evolves, from these developments. So with that, let's quickly look at where the markets are this morning. It's 8:23 a.m. London time. We've got spot gold at 2025. It's down about $1. The high's been 2029 and the low to 2021. So a pretty narrow range there. Silver's up 6 cents, trading at 23.85. The high's been 92 and the low 74. Dow futures up 14 points. NASDAQ is up 4 and the S&P is up just under 4 points. Not really much activity there. The currencies, sterling is up just under 0.25%, 126.74. The euro is up 1/10 at 109.34. Yes, and the dollar is up 1.1% versus the yen, which is not surprising. After the BOJ didn't move on rates, dollars at 144.35. And the weaker the yen gets, or the stronger the dollar gets, I would say the better that is for the whole system in terms of liquidity because of the yen carry trade. And as I said, go watch some of those videos on my playlist so you learn about what the yen carry trade is. The dollar is unchanged versus the yuan, just below 7.15. The Aussie dollar is up almost 1/3% at 67.25. The dollar is down 1/10 versus the loonie, 133.83. And the New Zealand dollar is up 0.4% at 62.35. Commodities, crude oil is down slightly, about 0.5%, 72.50. Brent is down about 0.2, just below $78. Platinum is down about $1, trading around 947. And high-grade copper is up 0.5% at 387. And we'll finish off with the bond market. The 10-year yield is pretty much where we were yesterday, around 392. Hasn't changed much, but it's down about 4 basis points overnight. UK gilt market, still under control. They've managed to bring rates lower. As I've been saying recently, I don't think it's going to be long-lived. Be as it may, the 2-year gilt yield is at 4.32. It's unchanged. The 30-year is at, it's at 4.17. So with that, I'm going to wish you all a very good day. Take care. Bye.